up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley is the CEO of Akerna, the best trade idea resource out there.
What is up, everybody? Welcome back to another edition of Benzinga Power Hour. Happy Thursday to everyone. We have a packed show today, as always. Joining us in a few moments will be Frank Curzio. And then at 12:30, we have John Darcy from the SALT conference. He's going to join in and talk about the conference coming up in New York in a couple weeks. Exciting stuff there. And then at 12:45, we have Gareth Soloway joining us again from In the Money Stocks. So as always, a packed show with some good trade ideas, as well as we'll be going through kind of the top headlines of the day. Anything in the news world you need to be paying attention to in the markets. Right now, I've got Alibaba pulled up on Benzinga Pro. This is one that I've been watching. This right here is just a 2-day chart. So we see a little, weakness today coming back down. It looks like we might come down and test this 174 flat level. But if you go out to the daily chart, so we go to the year chart, looking at the dailies here. It looks like we had a little double bottom here, and now we could run if we see this stock continue to have green candles. It could come all the way back up to this 195 level. So this is one that has been on my watch list. If you watch this show, I like to trade BABA. So let me know in the chat. Give me a 1 if you are long BABA. Give me a 2 if you'd be short here. And let me know if you've been trading it, and if you have, how you have been trading it. And that's all been on my radar today. So without further ado, I want to go ahead and bring Frank on. Frank, of course, hosts his own podcast, and we're gonna bring him on, talk about the podcast, talk about some stock picks. Without further ado, Frank Curzio. Frank, host of Wall Street Unplugged. How you doing today?
Good. How you doing? How's everything?
It's good. We're busy here at Benzinga as always.
Awesome. Busy's always good.
Yep. Better than being bored, right?
Absolutely.
Real quick before we get to here, I'm looking at the chat. Looks like we've got a mixed bag. Some people are saying 1, they're long BABA. Some people are saying 2, they don't trade it. Before we get to your stock picks, what's your mindset with BABA right now?
It's interesting. That's not the one I would really play here. We saw a lot of Chinese stocks get hit on the news, especially gameplay. And it's not just gameplay, right? I mean, they're limiting, gameplay for 3 hours, I think, per week for kids under 18. And it hurt a lot of the China stocks, also a few of the US-based gaming companies, video game companies, which is actually one of my picks today because they don't have a lot of exposure there. But I just think a better way to play that would probably be Take-Two, which also got a little hit. Trading about 25% off its highs. They reported earnings that were okay, but there's a company that reports earnings that are all over the place for the last 15 years. It's a company I covered. I started recommending it at single digits a very, very long time ago. Now I think it's a fantastic opportunity to buy. They just have great franchises. Grand Theft Auto is what everyone's familiar with. That's the largest selling entertainment product in history for one day and also for a weekend. And that's including movies, books, everything. So it's sold over 7 billion copies and that's how much revenue they've done over the franchise, which has been 7 years. And they're going to come out with the next version probably in about 18 months or so. But even if it takes 24 months, the buzz is going to come out, and they're going to start marketing it. And that's another thing, too. In this industry, there's very high barriers to entry where it costs anywhere from $300 to $500 million to develop a game. And that includes marketing. So you need a lot of money to do that. And when you have Electronic Arts and Activision and, Take-Two. Take-Two, I think, is a better play. It's about a $20 billion market cap, but this is the one I like on that sell-off along, you saw Alibaba, JD, some of the Chinese stocks, Tencent get hurt on that news. It's also, Alibaba's into, much, much more. Gaming is a small part, but it's just China's really cracking down on everything. So what else are they going to crack down on next where, it's been hurting a lot of these companies. And I think that's why I'd be a little worried with Alibaba, with Tencent, the pure plays, because, China's a little crazy right now. And I think it's going to get a lot worse before it gets better as they continue to ban lots of things and government gets very involved in a lot of these. It's going to turn off a lot of U.S. investors.
Yeah, 100%. I think, that's why we've seen a lot of that sell off, not only in Baba, but a lot of other Chinese stocks. It's just that there's so much risk and fear there. And I think, with that being said, there's a lot of risk. But if you buy Baba here and say 2 years down the road, nothing has really fundamentally changed with the way that we're doing business with China or the way that China's cracking down on businesses, then it could be a good value play. But I agree with you on the video game front. I think out of the big names between Activision, EA, of course, we can throw Roblox in there now. I like Take-Two a lot. I mean, I think the
Roblox
financials
is amazing. Roblox is an incredible company. I mean, I own that personally. Again, it's like Fortnite on steroids. I think it's a fantastic company too. But just in terms of that's a very, very expensive valuation. It just came out of the market, which when these things get released now, only regular retail investors are only able to buy these things at 10, 20, $50 billion valuations. It's very, very expensive. They do have growth, not very strong growth based on their first quarterly earnings. But with Take-Two, I just think there's a tremendous opportunity where the price is and the growth coming up in the next 12 to 18 months.
Yeah, and I mean, I think that's incredible, Frank, that you said you pitched this stock originally when it was at single digits, $7, and it's
holy cow, yeah, we've had it for a while, so
it's at 163 right now. During the pandemic, we saw it get all the way as high as $215. So yeah, and I mean, again, it's crazy to me right now. So if you go to Twitch, which is where people go to watch people play video games.
Yep.
The Grand Theft Auto 5 is one of the most watched games on there. And this is a game that's it's 10 years old now at this point.
Yeah.
Here, I'll pull it up real quick.
It's still their largest revenue generating product because just the online mode that continues. And I think that's why it's been taking so long to launch the next version, because it used to be about 3 years. Now it's like 8 or 9. I think it's 7 or 8 years old, might be 10 years old. But it's still generating tons of revenue. It's kind of like a Fortnite when you want to add things, when you want to get new cars, you're constantly spending, $5 here, $10 there, $20 there. But every quarter, that's their number one selling product. And they're going to have to integrate that, of course, into the next version. And they've been saying, hey, you know what? Let's make sure we get this right, even if it takes a long time, because we're fine with Grand Theft Auto 5 because it continues to generate, I won't curse here. Maybe I will. Shitload of revenue for the company. A lot of revenue for the company.
Yep, cursing's fine. But yeah, so here's on the Twitch homepage right here. Mm-hmm. These are kind of the most watched channels. You got around 87,000 people watching Fortnite. Mm-hmm. And 174,000 people watching Grand Theft Auto 5 right now.
That's something to be said, right? I mean, that title and how old it is, but just they keep updating it again. Now you could go online and update it, and constant updates. You don't just get the old video game and you put the cassette in or the little disc in, and then and that's it. Well, there's constant updates. Everything's online now, and allows these titles to really stretch out their life. And Grand Theft Auto is a great example of that.
Yeah, and I mean, again, if you buy Take-Two now, as far as catalysts go, there will be, a Grand Theft Auto 6 catalyst at some point down the road. And my theory, one of my, what I bet that the company will do is they might follow Fortnite's lead and put out, say, a Grand Theft Auto 6 Battle Royale version that's free to download, that encourages, users to then go buy in-game purchases, whether that's skins, maybe you can buy cars or whatever. So I think that's where a lot of video game companies are seeing an opportunity right now, is to put out a free-to-play version that, of course, just gets a lot of users on the platform. Yes. And then they can go from there and kind of upsell those customers with skins, in-game purchases, however that is. So, and then on top of Grand Theft Auto, Take-Two, of course, does the NBA 2K series, which is very big. I think 2K, the basketball video game, actually had kind of a down year last year. Mm-hmm. But that franchise is just huge, and there will be a new one of those coming out.
There's a lot going on with the NBA in terms of politics, so I could see that, but I think that's going to come roaring back. But Red Dead Redemption is also very, very big. They have these franchise. They used to be a one-product company. Again, I covered this for like 10 years. It used to be just Grand Theft Auto, and every time that came out, the stock would go up tremendously. You'd see revenues go from maybe 30, 40 million to 250, 275 million immediately just because of that title. And now they broaden out to so many different franchises, and these guys are great at what they do. Rockstar, part of that division, is very, very good as well. So, they're well positioned. I think the stock is cheap. I see a lot of upside. I see it going well above $200. And again, it's a very small market cap here at just $20 billion compared to its competitors. So,
Yep, and shout out Drew Dennis in the chat saying microtransactions are the new revenue stream. I think we had EA kind of teased that they might try to mess around with kind of a free to play download game mode in FIFA this year, where instead of having to play or pay $70, to buy the FIFA game, you can maybe download a game mode for free, and they'll have those microtransactions built into there. So that I think will be a very interesting development for gaming companies. All right,
once
so we
you
got
start with that model really quick, once you start, you keep going, right? Because you want to buy different products, you want to upgrade your whatever avatar, and it's constant upgrading. You're playing against people who have upgraded in order to get better. It's almost, once you do that model and you get someone to really take out that credit card, holy cow, that person's going to pay for a lot of stuff going forward. If we've seen that with Roblox, we've seen it with Fortnite. I mean, that is the new model. So yeah.
Yeah, what's interesting too, just looking at this chart from EA, we don't see, there's actually a pretty stark difference between looking at EA's chart versus Take-Two. We saw Take-Two have a high all the way at 215 and it was trading at 165. So about, 25, 30% lower, whereas EA is kind of back up to its, mid-COVID highs. So that's interesting to me there. And yeah, I mean, back to your point, Frank, I play FIFA. And they have a game mode on there that's an Ultimate Team game mode that you can buy you can spend money to buy packs, get new players, all this. And I was thinking about it, and I was like, if they put out the Ultimate Team game mode as a free-to-play game mode, I would be more encouraged then to spend, $30 on packs, because I wouldn't have to spend that $60, $70 to buy the game.
Yes.
So I think there'd probably be a lot of people in my boat. Let's see, we got some news. I guess Electronic Arts and PGA Tour announces that's interesting, because 2K actually made a PGA game a year or two ago after a couple years of having no golf video game. So I wonder if EA and 2K are going to be competing with this new golf game, or what the deal there is.
Yeah, anxious to see who they're going to have the cover.
Yeah,
Jambo on the cover. I think that would be the best thing to do. I mean, that guy's
that'd be very,
people love him or hate him, but he's very, very popular. He's becoming the face of golf right now. So yeah,
that'd be very polarizing. Yeah, I know on the 2K PGA game they put out a year or two ago, it has Justin Thomas on the cover. What's up, Young Investor? Shout out Young Investor in the chat. If you guys don't know Young Investor, go check out his YouTube channel. Great kid, great insight coming from him. All right, Frank, moving on from the video games. Anything else you're looking at right now?
Yeah, this is a stock that's, I'm pretty sure, off a lot of people's radar that I think has enormous upside potential. So a lot of people are not paying attention to the uranium industry, and uranium is on fire. It just passed 6-year high. This has been one of the biggest bear markets I've seen in my 25-year career, outside of something that's in a secular decline like coal or something that becomes obsolete. Uranium is, and nuclear, we need. It powers electricity. We're the largest consumers of it in the U.S. And now with the green energy push, now that Fukushima's behind us, we've seen prices, 130, 140, and they've gone all the way down to the 20s. Now they broke out $35, $36, and there's reasons why it's breaking out. It's not just supply demand. Finally, massive demand's coming. Electricity companies have to lock this in. And they haven't yet, but prices are going up, and they've gone up recently. And there's a reason, because Sprott, which is one of the biggest mining firms, investment firms in Canada, they came out with the Physical Uranium Trust. And what this does is they are buying physical uranium on the market, millions of pounds. And as they've been doing this, right, so basically it's like an open-end trust where you constantly, raising money and taking that money to buy it. Kind of like a miner in Bitcoin, where all the money you keep buying Bitcoin, and you have all this Bitcoin on your balance sheet. Now they're sitting here with all this uranium in the balance sheet, and it's pushing the price up, which is going to force these electricity companies who have been on hold and saying, hey, prices are cheap right now. Remember, they're 140, they're 35 right now and just broke through 6-year highs. And so they could double from here, and you still be 50% below those highs, which is incredible. And you have the Green Energy Initiative that's really pushing this as well. You have Bill Gates. And one of the best plays in this is Uranium Royalty, UROY. It's the chairman, and I believe he's a co-founder, is Amir Adnani. I just had him on my podcast, Wall Street Unplugged. You can go to www.wsupodcast.com. Again, absolutely for free. I interviewed him. It was a 30-minute interview. Please listen to that. This is a sector that's about to break out. It's been an incredibly horrible, terrible market for a long time. This is the only royalty company in this space. We see gold royalties, we see silver royalties, we see royalties even in the pharmaceutical sector, where they just take pieces of companies and more like finance companies. These guys already signed 2 royalty deals with with Cameco from to the largest royalty, to the largest uranium mines in the world, right, in highest grade. So once those things start producing again and come back online, they're going to be generating royalties, and they don't have to worry about exploration costs. That's why this is a better play. If uranium goes higher, which I think it's going to skyrocket from here. There's an industry I've followed for, over a decade. And when it does, all these names are going to go up. But this is the best play in the space because a lot of the others aren't going to produce uranium for a very, very long time. And what do they do to raise money? They're not generating revenues. They constantly have to raise money and dilute shareholders. And that's what they've done over the years, right, to stay alive during this crazy bear market. Now all the stars are aligned. You have Sprott, that physical trust, taking that uranium off the market, which is forcing those prices, pushing those prices higher. And electricity companies are looking and saying, holy shit, we better lock in prices now. And a lot of supply has come off the market from Cameco, Gazprom, and now you're seeing demand really, really start to surge. There's very smart people, much smarter than me, that follow this industry that have been in it for the last 3-4 years. Big hedge funds are starting to get in. I know you're looking at a stock that's gone up a lot in the past couple of days. It's just the beginning. I think this is one of the best ways to play the uranium boom. Put a little money into it, into uranium, and I think you'd be really happy, and it's going to happen very, very quickly.
Yeah, I was just gonna say, Frank, how you couldn't have told me about this a couple days ago before it had all these big green candles?
Sprott physical uranium is not. It just went public recently, and now that everyone's seeing what they're doing, buying millions of pounds, that's significant. I mean, we're looking at, I believe it's 200 million pounds is total consumption. A lot of that comes from the U.S. I think it's 30% or so. So when you're looking at a million coming off, I think it's 1 gigawatt for a nuclear factory is about 450,000 pounds. So you could see how important that is and how much is coming off the market. And the fact that it's just loading on a balance sheet, it kind of tracks the price of uranium. So it's going to be trading at a premium or a discount. But it's a game changer. You needed something to happen. This is an industry that I was incredibly bullish on for the past 3 years. That's why I've heavily invested. I'm even invested in this company as well. And now you're seeing all the stars aligned and everything's lined up. This is an industry people are going to be talking about probably when it hits $50 a pound and it's at $35 a pound. I think it's going to go very, very high, much, much higher, and it's going to happen quickly because it's been so super depressed.
Got it. And do you think just in the kind of clean energy sector, this is, the nuclear with the uranium, that could be one that we see grow more, compared relative to solar, hydro, some of the other clean energy initiatives?
I think this is going to, when you look at sectors, right, throughout, the cycles and bull and bear cycles, they always tend to swing, all the way to one side. It's either, they go incredibly, just like we saw in 1998, 1999 with tech stocks, right? In 1998, they were expensive, but few people know the NASDAQ doubled again in 1999 till its top of March 2000 before it crashed 70-75%. This swung much, much lower than expected. So if you're looking for something that's a green energy play that's dirt cheap, the hedge funds are lining up, they're getting in. I know a lot of hedge fund managers that are creating funds just for this uranium, that just the fundamentals are aligning. And now the big catalyst was Sprott coming in here, being able to buy this, pushing prices higher. And now it's going to force these electricity companies who are on the sidelines saying, hey, we'll wait a little bit to lock in these remember, they need uranium, right? They need this. They need nuclear in order to power electricity. This is a real industry. Fukushima, now you're looking at sentiment has changed tremendously, where everybody, when something like that happens, a traumatic event, everybody thinks it's going to be a nuclear disaster every month. It's very, very rare that something like that happens. Again, that was tsunami that caused that. Going forward, people, and look at the green initiative, where the green initiative is forcing companies to change. Even if they believe in it or not, you have to change. And this is one of the initiatives, I think, from a risk reward standpoint, better than anything in green energy you could buy at this moment.
Yeah, I mean, this is one I've always thought, after learning about the different types of clean energy, that nuclear actually has, a lot of benefits and is very cost effective. Of course, any problems with it can be kind of catastrophic. So there's a lot of fear surrounding it. Mm-hmm. But I think as we explored, different clean energy solutions, that nuclear will kind of, come out on top as something that makes the most sense. So someone in the chat's asking for a price target for this. I see previous highs of about 383. It's currently at 316 right now.
I mean, I'd be putting a fake price target on it based on fundamentals. If we see prices double from here, which I think is going to happen, I think we're going to see 70, not 50, 60, but if we see 70, this is easy a 5-bagger from here. You're going to see a lot of companies do well. Usually when you see you're in a bull market, the crappiest companies do the best, right? And then in a bear market, those companies get hit the hardest. So there's another way to play this is UEC, which is also a company that Amir founded. So Amir Adnani, and listen to the podcast. I'm not pumping it and plugging it, but if you don't like it, sign off after 5 minutes. But that interview, you're listening to one of the smartest people around uranium, someone who's Iranian and started a U.S.-based uranium producing company in 2004, 2005, who's been through biggest booms and biggest busts. What he's done to position his companies right now is unbelievable because it's been such a terrible market in so many years. And I know him well. He's a good friend. That's not why I'm recommending the companies. He told me, even on the podcast, he's never been more excited in his 16-year career on uranium, where everything's just aligned. So listen to that interview. He's a lot smarter than me when it comes to uranium. This is his life. And once you listen to that, you are definitely, and it might be resulting in, we had him on, he has two companies. We talked about companies and we're seeing, these things pump up a lot. We do have a lot of listeners, Wall Street Unplugged. So definitely give a listen. When you do, you're going to see why there's a lot of excitement in this industry.
Yep. And I'm dropping the link to the podcast in the chat. You can check it out from Frank's website or on Apple Podcasts or Spotify. Available a couple different places. All right, Frank. So we got Take Two. We got Uranium Royalty, ticker UROY. Do we have one more for us on this?
One more
Thursday?
is Aero Environment. AV is a symbol, right? So they make drones for the military. They switched their business model. We're in this company for a while in the 30s and 40s, and it rocketed to 130, and now it's back down to 100, a little bit above that. It's kind of been at a standstill. If you look at the year chart there, it's kind of been a little bit drifting lower, but we're seeing with Afghanistan, we're seeing drones. These guys, every part of the military is a customer. These guys have some of the best technology in the business. And I'm looking at a company that's trading it has a $2.5 billion market cap, meaning that Lockheed could come and purchase them. And, nobody would even know in the company that they made the purchase, right? Because it's a $100 billion market cap. So the fact that they're in one of the biggest growth areas inside military, inside defense, and they have the best technology in there, and they don't just supply US, they supply our allies as well. And business has been booming. They're reporting record profits. They had a very good quarter last time. They guided conservatively, and they're going to report in a week from now. I don't know what they're going to report in a week. So if I was going to take a position, take a small position now. Maybe they blow out the numbers and it goes higher. At least you own it. And if it goes down, good for you, because now you can add to it, lower your cost basis. Because I think they report on September 9th. They report pretty much off of, not on anyone else's schedule because earnings season ended pretty much last month. This is a name that's well positioned. I believe it's going to be bought within the next 6 months and acquired at a big premium. This is a name I like a lot. I follow a long time, and we are up on it, but it hasn't done anything for a little bit. And I think at this price, I think 120 is very, very easy in the short term. I think it can go much, much higher. And I think a takeout is going to be at over 150 because of their technology, because of how much spending is always going to go into drones, unmanned drones. You're going to see that in every single war. And, they're just right now in the sweet spot. And I love that the stock hasn't done anything. And right now, I feel like, if you look at the last month or so, it's really starting to really get a little bit of momentum here. I think it's a good opportunity to buy. Good price point, too.
Yeah. Excuse me. Yeah. Just looking at the chart right here, it looks like at, this 105 level, we might either hit some resistance, or if we break through it, then it has, room to run up to this 115.
And it could go past that, like we saw with Umbrella, right? I mean, it was just like 100, and boom. And the next thing you know, the stock's up 20%. They really report a good quarter. I don't know what they're going to report in the quarter. I know the next 12 months is going to be huge for this company. You're going to be seeing, a lot of new orders. They just announced 2 new orders, I believe. I don't know if it was with the Air Force for about $15 million like a couple of weeks ago. So these guys are going to continue to get lots and lots of orders. I just like where they are. It's like an under the radar company nobody talks about, but it's right in the heart of the biggest growth area inside defense spending.
Yeah, I know a lot of eyes have kind of been on different defense stocks over the past couple of weeks with all the developments in Afghanistan. But I like the thesis there that AV could be a takeover target for someone like Lockheed Martin. Of course, I'm seeing the market cap for AV be about $2.5 billion. So it'd be a pretty big acquisition, but certainly possible.
2% of their sales, and I don't know how much they have on the balance sheet, but I'm sure they have a lot more than $2 billion on the balance sheet. So it wouldn't be really big for Lockheed. It might be bigger for Northrop, which has about a $60 billion market cap, but a little bit bigger. But still, maybe they spend $5 billion. But you see the companies that get taken over, the ones that are pure plays in certain industries. And this is a pure play, and it happens to be a pure play on the biggest growth market inside defense. So either they're going to benefit, and they've made acquisitions that have worked tremendously over the past year. they're just well positioned to get taken over. Because as you get larger, and even you're a defense company, remember these are corporate companies that need to make profits, and it's very easy right now in today's world where a lot of stock prices have gone higher and higher and higher to use your stock as currency to purchase and to acquire that growth. And that's what we're seeing across the board. We're seeing it, marijuana, how many acquisitions take place. Most of them are done in stock. That's what I see with AVAV, where, hey, we need to buy growth because, internally we've made it grow as much as we can with the avenues we have. But this is a high growth company, and it'll be an easy takeover target, especially if they do it in stock.
Yeah, 100%. I like the thesis here. I think that's a very, strong point there, that any company that's a pure play, which you're saying this company, AV, let me get the chart back up, is the company, kind of the premier manless drone operator. So by positioning themselves in the market as that company, they become a very attractive takeover target from a company like Lockheed Martin.
Yeah, I mean, they have a nice backlog, so I don't think you'll see crazy numbers for the quarter, either on the downside. But if they do, you could see it come down. That's why only take a small position, maybe half position. Again, if it runs up, at least you own it. And if it comes down, you could buy some more, because the 6 to 12 month outlook on this company is incredibly. You're going to see it mentioned a lot. You're going to see a lot of more orders coming in. They're using drones like crazy because this Afghanistan thing is not over. And there's a lot of political tensions right now. So
100%. And shout out Solar Up in the chat is throwing, he says, as far as military drones, check out KTOS. There's certainly some other, players in the field. So, I think, like, if you have a thesis like that defense stocks could be hot right now, my advice would be go do your due diligence, figure out which one you think, will be the strongest and why that is. I like this play, Frank. AVAV, it's on my watch list.
Thanks. Would you say if you didn't like it, hey, I hate this play, I'm shorting it, everybody should short it? That'd be great, actually. That'd be entertaining.
Yeah, that makes for good TV. Yeah, I'll let you know. I'm sure if we keep having you on every Thursday, eventually there will be a stock pick that I don't like, and I'll let you know.
Awesome. And beyond, yes. And everybody out there, you said something very important. Do your own due diligence. I don't care who you're hearing from, what you know about them. Do your own due diligence. Everyone has access to conference calls. You can do all that stuff. We encourage it. We educate it at Cursor Research. But definitely do your own homework on every single situation, no matter who you hear it from. So good advice there.
Yeah. And I mean, again, I've been looking at these stocks. I was looking at Lockheed Martin and Raytheon, right, when all this stuff in Afghanistan was going on. I was kind of surprised that we haven't really been seeing them do anything. So I think, like, a lot of times that's a sign to me that, okay, Wall Street doesn't really feel like, maybe we're not going to be acting very soon as far as sending in a bunch of drone strikes. Otherwise, we could have seen these stocks, run up a few percent. So I initially,
not all of them are leveraged to drones, though. So if you think about the thesis on it, we pulled out, which means that, less military, right? So, but what are we increasing is drone strikes. So that's why I love this play, because inside of it, that is where you're seeing tons of spending go into. And no matter what side you are, Democrat, Republican, there's always going to be tons, billions of dollars, tens of billions of dollars, hundreds of billions of dollars going into drones, because that's the easiest way to, let's face it, attack certain areas. And also they're unmanned. So you don't have to worry about sending troops in. So that's a very big deal. I think it's a massive growth market.
Yeah, 100%. I think we're going to see drones be the forefront of, all our military intervention going forward. So as you said, huge growth market. But yeah, again, truly like the stock pick. I actually wasn't even familiar with AVAV, and I was looking for drone plays. So again, it is on my watch list. We're seeing it trade around $103 right now, previous highs of 143, 145. And as Frank said, could be an interesting takeover target.
Absolutely.
All right, Frank. Well, thank you again for hopping on the Power Hour with us today. Again, this episode is brought to you by Wall Street Unplugged, Frank's podcast. The link is in the chat. I'll throw it in there one more time, so go check it out if you have not already. Frank, any last words?
Just thanks for having me on. I really like being on here. I love that there's so many young investors that you guys target and go to your site, and it's really, really cool, guys. Just do your research, do as much homework. You have access to everything. And a lot of times you'll be smarter than a lot of people you'll listen to. You'll be surprised because you have access to trends like Roblox, or if it's something that you're seeing with Instagram, when when Facebook took over Instagram, they wanted Zuckerberg's head on a platter because nobody understood that. Where I got emails through my network saying that this is the greatest thing ever, and now it's worth over $100 billion, and they got pissed that he bought it for $1 billion. So a lot of times you're going to be smarter than some of the people that you're listening to. And you're going to be wrong. You want to limit your risks, but it's really cool that we're seeing a lot of young investors, especially through Benzinga and your platform, come on, man. That's really awesome.
Yeah. And just on that note, I mean, I think when you have a touch, especially on what like a lot of young people are doing, that's how I feel about Roblox right now. Like anyone I talk to that has kids, like I'm 25. I don't personally have a lot of friends playing Roblox and stuff, but any person I talk to with kids say, okay, their kids are on Roblox X amount of hours a day, yada, yada. And to me, that's just like a huge sign. And a lot of times maybe these analysts don't have their, finger on the pulse in that way, that they know what, kids are doing and like that. And something that sticks out to me, from my personal experience was I remember as like a 12 or 13-year-old, I brought a flash drive home from school, like something you just plug into your computer. And I remember showing my dad it. He had like no clue how it worked, what it was, but he thought it was like the coolest thing ever. And he bought a little stock in SanDisk. And, 2 years later, SanDisk was up like 300% from where he bought it. And I was like, where's my cut? I'm the one that brought this. I'm the one that brought this flash drive home and told you about it. So
yeah.
But
what did he say to you? He said, he'll give you a cut after you pay him rent, right?
Yeah, something like that. I was 14. I was like, come on, I'll when I get a job, I'll start pitching in. But yeah, I think that is a very, obviously it's nothing that's going to work like 10 times out of 10, but like to your Facebook example, if you knew that, if you're 18 and knew that all your friends are on Facebook, but analysts are overlooking it, saying, whatever, it's like, there are times where you might have an edge where, other people aren't looking at something or they're overlooking it. And you're there, on the ground level, really able to see it.
Doesn't matter your age. And Roblox, great example that you brought that up. I have a 13-year-old and a 10-year-old, and that's why I know Roblox, because they're on it all the time. Dad, can I spend $5? Can I spend $3? Can I spend $10? All the time to buy new stuff. And when you're a parent and busy, and sometimes you're like, yeah, just spend it. Okay. Give me another half an hour to hang out or whatever, and watch the football game. But that's how I knew about it and how addicting it is, because all their friends are on it too. So yeah, great point. And you always have an edge, and especially with today's tools and things that you can find on the internet, even your site, Benzinga, it definitely levels a playing field. So I'm glad to see a lot of young investors really getting on board.
Oh, I see someone in the chat saying Roblox. My 14-year-old says Roblox is old news.
I don't know, but I wish it was old news. It would cost me a lot less money than what I'm paying for my kids. So hopefully you're right. I hope you're right. But I don't know. I don't, the fact that you can create there and just make, you can start a business through there basically and make your own money and your own world and stuff like that. It is pretty incredible. And the revenues coming in are incredible. But let's say it's not old news to my kids yet, but maybe you're right. But that's something I'm going to look into now. That's great.
Yeah, I mean, if I start hearing that more and more that kids are playing less and less Roblox, that's a sign too. You got to be able to be open-minded and see it on both sides. But again, Frank, thank you for coming on. I know you got a busy Thursday, so appreciate you taking all the time to join us and joining us on ZingerNation today.
Yeah, I love it. Thanks for having me on.
Of course. All right, enjoy the rest of your day.
You too, man.
All right, y'all. That was Frank Curzio, Wall Street Unplugged. Link is in the chat and the description. I'll throw it in there one more time. Go check out his podcast if you have not already. Love Frank coming on and seeing his stock picks. Yeah, Justin, that's because the kid is 14 and Roblox is for younger kids. I agree. Maybe the 14-year-old it's just old news to the 14-year-old, but the 6-year-olds still love it. I don't know. We'll need to do some DD on Roblox. Maybe we'll put a poll out there to all our ZingerNation family and see, are your kids playing Roblox? If so, are they playing it as much as they have been in the past? Are they playing it less? While we're talking about it, let's just check out the chart real quick, because I haven't really been watching this one. Wow, it's at 85. I mean, this is a stock that's been super volatile, but it's kind of been trading in a range for the past, 3 months or so. It seems like in this 93 to, I guess it got all the way down to 75, but it seems to kind of just be trading in this range. So I'll be watching this one, seeing if we see some consolidation. But real quick, I'm going to get to some top headlines for the day. This is something newer I kind of want to start doing on the show, is bringing in some more news as the day goes on, because I think this is a perfect time, around lunchtime, to kind of get a midday update of what's going on in the markets, what's driving the news. So first, we have the jobs report that came out this morning. So the initial jobless claims was 340,000. This was against a $345,000 estimate, or 345,000 job estimate. So less jobless claims than were initially expected, which has driven The market's higher. We saw SPY hit all-time intraday highs. Stop me if you've heard that before. It seems like every single day we're talking about SPY all-time highs. NASDAQ close behind it. Actually, wow, NASDAQ is now red on the day. So this morning, this news came out, and basically this is the lowest amount of jobless claims that has come out since the pandemic hit and started. So very strong sign for the economy. Economists expect that U.S. employers added 720,000 payrolls last month, and that the unemployment rate ticked lower to 5.2% from 5.4%. So 0.2% doesn't sound like a lot, but when you're talking about on a macro level, 5.2% versus 5.4 is somewhat significant. And then the Federal Open Market Committee members have signaled they are inclined to look especially closer at labor market data to determine when to start tapering their massive crisis era asset purchase program. So it's kind of a two-sided story, or two-sided sword here, because we see jobless numbers drop, signs of a recovering economy that might get to a point where we see the Fed more willing to taper and to kind of stop some of these things they've been doing as far as purchasing assets and whatnot. So it will be interesting there, because the markets will definitely get hit if we do see the Fed act on this. And the August jobs report will be the final monthly government employment data that the Fed receives before its next policy setting meeting, which is taking place in late September. So I think that will be the time, late September, later this month, we will know, is the Fed going to taper or not? That is the question that everyone in the market has their eyes on. And again, it's kind of a two-sided sword, because you see jobless claims go down. It makes the Fed more inclined to taper. But I don't think anyone is rooting for a higher unemployment number. So at the end of the day, the Fed raising rates or anything like that isn't necessarily a bad thing for the economy, as long as it's coupled with strong economic growth. If you're not seeing the strong economic growth and you see the Fed raise rates, then that's bad for markets, bad for the economy. But if we're seeing a strong economic growth and they raise rates a little bit, then it's not necessarily a bad thing for the economy. It might hit the markets a little bit initially, but we will have to see later this month there. Second news update I want to give is on support.com. So support.com, we've seen just have a crazy ride as a short squeeze, similar to what we've seen out of GameStop and AMC, albeit not to the same magnitude. But we saw the stock get all the way as high as $60, currently trading at $24. And the reason I bring this up is not just because of the stock, but more on a macro level. The dynamics of shorting has seemed to have shifted, where we see hedge funds and institutions less willing, because of the events that we've seen over the last year with GameStop, AMC, less willing to short stocks. There's data out there that supports that. So as of mid-August, we saw let me get this data right. So actually in February, I'll start here. In February, about 3% of the outstanding shares of the S&P 500, 3% were companies that were held by short sellers. So 3% of all shares out there, the S&P, were on the short seller side. As of mid-August, the percentage was 2.24%. So about 0.75% decrease in constituent companies that were held by short sellers. So that just shows that there are less short sellers out in the market right now than there were out there in mid-February. I think a lot of funds and institutions have seen what's happened to, companies like Citadel, Point72, all those companies that got hit hard by the GameStop AMC short squeezes. And they say, hey, we can find investments on the long side. We don't need to mess around with this short selling stuff. Short interest for support.com was about 27% as of August 27th. I will venture to say a lot of those short sellers have cut their losses and gotten out of the stock now after we've seen, because as I said, that was on August 27th, which is right about here, right on this big day we got all the way up to $60. So, I mean, look, is that to say that this, goes away and we if we go a few months without a short squeeze, do we see some, short sellers come back into the market and get that number back up to where it was of how many, shares were shorted before we've seen these things? Who knows? All I know is that right now it seems as if firms and investment firms are less willing to go out and short companies. So bad news if you're going out there looking for the next short squeeze. Someone in the chat's talking about BBIG, Vinco Ventures. Of course, we've seen, a pretty big squeeze there as well. This stock also has come down. But yeah, I mean, I don't know about y'all, but I stay on the sideline here after we've seen a squeeze like this come back down because look, this stock's still expensive. $8.50 when it was trading, below $4 or around $4 for the majority of the year. Could we see another squeeze that pushes it higher than this $12 mark? Yeah, of course we could. We've seen that with AMC, GameStop, all these other stocks. But right now, I'm staying on the sideline. We'll see if this continues to crash back down to the previous levels or if we see another move on the upswing. And then the last news update, I'm going back to Hurricane Ida. So there's a new report out there saying that there could be at least $18 billion in insurance claims, and that's just in New Orleans from Hurricane Ida. I'm going to go ahead and get this article pulled up. I believe it was from Reuters. And there's a few things interesting here. So again, $18 billion from insurance companies claims. And this is just in New Orleans. So we saw New York get flooded last night. So we can almost bet our bottom dollar that we're going to see a lot more insurance claims come in for all the damage that happened in New York last night. But what's really interesting to me is insurers are bracing for a hit of about $18 billion from Hurricane Ida, according to company Karen Clark and Co. But if we look at that compared to Katrina, Katrina saw $87 billion in claims. So as of now, we're seeing a lot less destruction, at least, as far as the insurance claims go. But of course, this is nothing settled yet, so we could see this number tick higher. And they're citing that costs of lumber and other labor shortages are going to drive these costs higher. So it'll be very interesting to kind of see what happens here with insurance companies. Let me know if that makes you bearish for some of the biggest insurance companies out there or bullish that, these claims will be filing in. I think it's tough. We've seen what's happened, down in New Orleans. And again, New York last night was pretty crazy. So let me know what you guys think, if there are any ways to kind of play that. I don't really like to try to do stock plays based off tragedies or anything like that, but just some interesting numbers coming out of here on the financial side. Let's see. Anything in the chat? Yeah, and NCal, Luke and Jason are at the dentist right now, so I'm filling in today. But I'm not alone. We have a very special guest joining us again on the Power Hour, his second appearance, I believe. So without further ado, I'm going to go ahead and bring Gareth Soloway from In the Money Stocks on. I'm going to wait for him to give me a little, universal thumbs up sign that he's ready to go. We're going to play our little intro video. Here we go. Gareth, how we doing?
Hey, I'm doing great. How about you?
Good to have you back on the show.
Thank you for having me. It's definitely a pleasure to be back.
Yeah. So, what stocks have you been watching? Any sectors in particular?
I mean, over the last couple of weeks, I was pretty heavily invested in some of the Chinese names that had been beaten down. One of the things that I trade the most is the momentum and kind of the fear and greed aspects, and the fear in the Chinese stocks, whether it was Alibaba or Baidu or some of these other ones. I mean, it was just ridiculous. I mean, you would have thought that these champions of China were going to go out of business based on regulatory reforms. And yes, the Chinese government's reasserting their dominance. But certainly they're not looking to crash their economy by putting some of these out of the way. So those have been some of the plays lately. I still like my Viacom position, as that stock still pays a nice dividend, trading at a 9 forward PE. And you just never know. It might be a buyout candidate. Comcast is kind of an interested party and so forth like that. So those type of plays I've been doing. But I would say the biggest thing here is I'm just keeping a close eye on this market. The market seems to be limping into the holiday this weekend. We got the big jobs report tomorrow, which should be pretty interesting. And I'm curious if the markets are close to that corrective move.
Yeah, and I mean, I'm glad you brought up the China stocks, because I opened the show actually looking at BABA. I'm playing this right now. I have a 190 call that expires late November, and it was actually up not a lot, but about like 12% earlier today. And now it's back to even. So I'm going to watch BABA for the rest of this afternoon. I might bomb out of this call if I don't see, some more volume coming in, if it looks like we're kind of running out of strength here. But I agree 100%. I mean, bottom line is there's a lot of risk obviously involved in these Chinese names. But my thesis was if you buy it here, and we don't see any big fundamental changes in the way that China is running their economy or the way that we in the US are doing business with China, then, it's a pretty good bet that this stock will be trading higher, in a few months than it is right now.
Yeah.
And
I was just going to jump in and say, I 100% agree with that. And I think China looks at the US and kind of says, okay, we don't want to see what has happened in the US to happen here. And what I mean by that is, you have companies like Facebook and Google and some of these others that have become so big and so dominant in their industries that they can pretty much dictate what the government can do. I mean, we always hear about, hey, will the government crack down on Google or whatever, but in essence, they can't, and Google and just like the big banks, I was just talking about this with some of my traders today, how I still remember in 2008, 2009, and after the financial crisis, it was all about, too big to fail. We can't let this ever happen again. And what's happened? The big banks have gotten even bigger, and they're absolutely way too big to fail now. So you got a scenario where a lot of these bigger companies can dictate, the agenda for the government and say, hey, listen, don't mess with us. We can potentially put a hurt on the economy if you do try to do anything like that. And I think China says, listen, we're a communist regime. We have more power. We can crack down now before some of these companies get too powerful. And I think that's exactly what they're doing.
Yeah, and Matt Hammond in the chat saying, that the downside is still massive. And again, agreed. There's huge risk involved there. I'm saying that I'm willing to take a bet that we aren't going to see these huge fundamental changes either within China or the way that we're doing business between the US and China. And I think history shows us that kind of betting against huge fundamental changes like that usually, pans out pretty well.
Yep.
And I said something similar to your point where China is willing to kind of intervene with companies where it seems like the US has a more laissez-faire approach. And I said something on the show a few weeks ago where essentially I said, like, I don't think that's necessarily a terrible thing, that they're basically saying, look, we, the government, are not going to let the companies run all over this. We're willing to kind of flex our muscles a little bit and show that we're, whatever. And people hated what I said and called me crazy and all this.
Yeah.
And I did it. I get the sentiment saying, you want to have the government be hands off. But at the end of the day, would you rather have the companies then being in charge of what's going on that might not have, really the everyday man's best interest at heart? So it's not to get, all into the politics and everything, but it's a very interesting kind of conundrum.
It is, right? I mean, it's fascinating because you're witnessing kind of two sides of the spectrum with China versus the U.S. And it's important for people in the U.S. to realize we do have government bodies that actually do things to keep us safe, whether it's, the FDA making sure drugs are safe before they necessarily go on the market and certain things like that. China just has a much more hands-on approach. But again, like you're saying, it's a calculated bet. Everything you do in investing, everything I do in investing is factoring in the probabilities of something, right? So you're absolutely right. Could the government come out in China and say, okay, Alibaba, you're out of business tomorrow? Yes. But what are the odds of that? Or is it a 1%, a 0.5% versus, maybe a 70 or 80% chance that they kind of come out of this and continue to grow? And as an investor, if I allocate properly, right? So you're always looking at risk versus reward, or at how much of my portfolio do I put towards these riskier plays? You can still put yourself in a position where you protect yourself to the downside, and then you also have that upside, which can be massive.
Yeah, 100%. I agree, completely. Wait, Ken in the chat saying his BABA calls are ripping. Ken, let me know what calls you have, because mine right now are flat. You can see total return, $0, 0%. And on that note, I think that China kind of, it's clear that they want to be, like the powerhouse of the world. And I don't think it's going to be through, military intervention. I think it's going to be through their economy. So would they really be willing to, go out and completely dismantle one of their largest companies like Alibaba? I don't think so. I think they just have shown that they're a little more willing to kind of step in. And on the, here in the US, we see pressure on both sides of the aisle, whether right or left, to do something about Facebook, Facebook's power, Google's power, Amazon's power, so it's not something that's like out of the realm possible here that we see some, we've seen antitrust lawsuits come up against Facebook. It just happens that every time they come up, they get shot down.
Right. And I was going to say that's exactly what it is. Is like, I mean, I probably for the last 10 years, we've heard stuff about Facebook and Google, and then does anything ever happen? No, it's because, both sides can't agree and get together on it. And there's probably some lobbyist money in there. I'm sure there is, that's the way, unfortunately, our government works these days, but you're 100% right. I mean, it constantly gets talked about, but nothing ends up happening.
Yeah. And I mean, a little generous to say there probably is some lobbyist money,
right?
All right. Well, enough about, China and stuff. I don't want to, I know this is a very polarizing topic, but Gareth, you do have the ability to share your screen. So if you want to show me some stocks or some setups that you've been looking at.
Yeah, let's talk a little bit about the market. Let me bring up my screen share here and get you guys on that. Let me see, screen share. Bear with me as I get that up here. So this is the chart I wanted to go over first, the S&P 500, the SPY. And what I've been noticing here is that we continually are hammering on this longer term trend line, right? So what's amazing about this trend line, first of all, is that it goes back to the March 2020 lows. And I think just to realize a trend line can stretch back as far as that. And I've seen trend lines much further, but this is just an amazing one, how every time you kind of come down here, you bounce off of it. And one of the things that I've been noticing more recently is that notice how initially you made the low and you stayed above the trend line for a long time. Then you came down and got close, but you didn't tag it, right? So it was kind of like a half-assed kind of retest of that line. Then over here, you touched it. Then over here, you touched it a little bit more. Here, you pierced it, rallied back above, pierced it again, quickly rallied back above. Then here you had 2 days below before it's rallied back to that trend line. And the reason I'm bringing up each kind of hit of this trend line is because to me, it shows a weakening scenario here where initially it didn't even hit the trend line. It just came close. But every time it's kind of struggling a little bit more. And what that tells me is the market's getting in a more and more overbought scenario. So while it's so hard to pick when we're going to get that 5 or 10% correction, and by the way, we've really only had 3%ers. I think the last 6 or 7 pullbacks have been like 3%, which is amazing historically. But it does, to me, show me a little bit of a weakening scenario. The other thing I wanted to show you guys is the NASDAQ 100. So the NASDAQ 100 just yesterday tagged this upsloping trend line that goes back to 2019. And you can see this pivot high here, this pivot high here. And the reason why I bring this to your attention here is that yesterday we tagged the line and we actually put in what's called a topping tail. All right, and then today you could see that the NASDAQ, the QQQ, it opened higher and has basically lost its gains. In other words, it's struggling. And topping tails, again, are bearish indicators of distribution going on there. And again, notice how it happened right as it tagged that upper trend line. So just some interesting little things going on here with the charts. And by the way, the odds of the market falling into a holiday weekend are very low. But the question in my mind is it starting to kind of turn? Are we going to see a September kind of swoon? We've had 7 straight up months in the markets. You're due for at least some sort of down month, you would think, after 7 up. And we are going into a later period of the year where the Fed is likely going to start to taper. I don't think they'll ever raise interest rates because we'll get another crisis where they make an excuse not to. But I do think they'll taper the $120 billion in bond buying. And my guess is tech will underperform as interest rates do start to move a little bit higher.
Yeah, I mean, I think that's a very sentient point right there. I'm looking at the SPY chart from the chart you had up before this. It's almost funny how, like, I mean, anytime we've seen one of those pullbacks, we see, at least I see, like a bunch of retail traders like freaking out, like, and you start hearing things like market crash, all this stuff. Then looking at the chart, like, it's like, oh, that crash you were talking about was really a 2% pullback right to the trend line, and then here we go back up to another day of all-time highs.
Yeah. And one of the things that we can look at, and this is something that I've been paying more attention to because it happened on oil recently and showed its power, is look for where, so we see these little pivot lows. Here was you could go all the way back, but all of these are higher lows, right? So we know that the trend, as long as you're making higher highs and higher lows, the trend is intact. I'd be curious if we at some point do dip, and let's say we make a lower low. So here was your last low pivot. Let's say in a week or two, we dip down and we make a lower low. That would also be something that would kind of catch my attention because it would be the first time that has happened in quite some time.
Yeah, and I mean, going back to the QQQs, I mean, anytime we see a pullback, at least recently, we've seen the QQQs kind of get hit harder than the rest of the market. And of course, that that's just the nature of growth stocks. They'll move higher than the rest of the market, but they'll also move lower and move lower faster. So I'm curious if you are anticipating some sort of a pullback, would you be looking at playing, maybe some SQQ, something along that nature, or how do you play those pullbacks?
So that is what I've been doing, right? So I picked up some spider puts recently. I picked up some QID actually. So for me, the SQQQ being a triple is a little too risky for me. So I basically went in with a double, which is QID. So I've been accumulating that. I do have a little SQQQ, but it's a much smaller position because of the added risk there. But there's absolutely, there's some stocks I'm long right now, whether it's Viacom, and I think there are some that are cheap enough where I feel comfortable if I'm expecting a pullback in the market where those should hold generally their value. But I certainly have been over the last, especially the last week or so, adding to shorting opportunities on the indices, expecting a pullback. And again, listen, it's a hard game trying to pick the tops on markets just like it is on the bottoms. But I try to use what I'm showing you guys on the charts with these upper trend lines as factors for the probability. So we go back to probabilities of trading, and you just don't want to just pick a random, you don't throw a dart at the dartboard and just say, oh, that's where I'm going to do it. You have to have physical, factors behind your decisions if you want to have a percentage win rate that's better than 50-50 essentially.
Yeah, I mean, Gareth, I know you're pro trader, pretty serious about this stuff, but we like to YOLO some trades on here. So maybe you should buy some SQQ calls and see what happens.
Yeah, I play around a little bit with it. I do it real small myself, but I would absolutely do it. And by the way, going back to your Alibaba calls, even if you do pull back here, my guess is it's just a pullback before another leg higher. I think it's interesting going back to the China story that we haven't seen new regulation. I think the big test will be the holiday weekend. China's going to have basically a 3-day weekend here in the U.S. to throw some new regulation out. If nothing happens, then I think you'll see next week Alibaba and the rest of those Chinese names really rip higher.
Yeah, and again, going back to it, people in the chat were saying, there's so much risk there. Agreed. But where there's a lot of risk, there can be a lot of opportunity. And just looking at where Baba was trading a few months ago at the 310 level, and it's at 165 or whatever it's at now, it's like this company makes over $100 billion a year. If we don't see this intervention from China like we're talking about, then it will be trading higher. But of course there's risk there. I'm willing to take on that risk, saying I don't think there will be the huge fundamental changes that some people are scared of. Could I be wrong? Of course.
And one thing too to point out is that, and this is something I said to my traders today too, is that you have to look at the potential market, basically the consumers, right? So in the US, you have Amazon and you have 360 million Americans, and the valuation of that is, about a $2 billion stock, give or take, or $2 trillion, trillion dollar stock. Alibaba's trading at like a $400-500 billion market cap. They have 1.5 billion people to go after in the future. So even if China does say, okay, we're going to restrict you from doing the A, B, and C, the question is, at these valuations with that potential market, amount of people, can they still just crush it in the future? And again, just like you're saying, it's all a calculated risk.
100%. It's the same thing with the SQQ calls. Like if I'm anticipating a pullback, am I willing to put $500 on the line to buy a couple SQQ calls, knowing that could go to zero? Maybe. Sure.
Yeah. Why
We'll
not?
see.
Again, as long as to you understand. I think that's the biggest thing about investing, right? Is it's analyzing your own risk tolerance, and if you have a high risk tolerance, then there's nothing wrong with it. Like when they were doing all this stuff with Robinhood, and Robinhood was restricting the buying of GameStop, and I was a big person in saying, listen, everyone, if it's your money, you could do what you want. That's totally up to you. You just have to live by the consequences, right? If we lose money, we lose money, and that's the nature of the game.
Exactly. All right, Gareth. Well, unfortunately, we are running out of time now, but I love having you on the show, so we got to get you back on again soon. I don't know what your availability is, like next week or the week after. But yeah, it's great to have you on.
Yeah, thanks for having me. And absolutely, I'd love to come back on. I love talking technicals with you and trading. And I'll have my people hit up your people, and we'll get something scheduled.
Sounds good. Yeah, I think I was in contact with Brian, so I'll reach out to Brian, let him know that this appearance was a little bit short, but we'll get some more time on the schedule.
Awesome. Have a wonderful day.
All right. Yeah, you too. Enjoy the rest of your Thursday.
Thanks.
All right, y'all. That was Gareth Soloway from In the Money Stocks. I've got my Alibaba calls back up here. Let's see. I'm down about 2% total on the trade right now. As Gareth said, it might just be a pullback. I do think I have enough money in my portfolio to go ahead and buy another call if we continue to dip, to kind of average my cost in. I don't know if that's wise or if I should just cut my losses, but that's enough of me bloviating. We do have Get Technical coming up right now at 1 p.m. We have a very special guest, Ripster47. You might follow him on Twitter, is going to be joining us to talk some EMA clouds as well as some psychology trading tips. So do not go anywhere. This video will automatically redirect you over to Get Technical. Neil and I will be there. So stick around, ZingerNation. And if you haven't already, please smash the like. This really helps us out, not only internally at Benzinga to know what shows are doing well, but also within YouTube. If we want to see our Benzinga content continue to do well on YouTube, we need to get those likes up. Helps out the algorithm, helps out everything, and we appreciate it. We'll be back tomorrow at noon Eastern for another episode of Benzinga Power Hour.